Are there really any under the radar AI stocks at this point? The AI craze has really taken over the market, and a lot of the AI related stocks are at or near all time highs. They have had historic runs on the upside. It's harder to find opportunities at this point without chasing. What I'm going to show you today are three markets that I am really intrigued with for the next few months. Now, keep in mind, what I'm looking for as an active trader, I'm looking for markets that move back and forth. I'm not looking for a buy and hold approach. I'm looking for stocks that are going to allow me to get into option positions for a few days at a time. 2 to 20 days is my typical holding time. So what I'm going to show you here today is how you can take advantage of those quick moves on names that may not necessarily be on the top of your watch list currently. Now, if we go through some of the common names, you take a look at NVIDIA. No doubt about it, really impressive daily chart. It has had extreme moves. It's a great product. I love to trade NVIDIA. You can go down through some of the other big headliners, right? If you take a look at AMD, if we take a look at Intel, I mean, these are names that are in the headlines all the time. You turn on CNBC, you turn on Fox Business, any type of financial media publication, they are talking about these names all the time. I'm not opposed to trading these. I trade these all the time. We can go into some of the other indirect AI products. If you go the cloud route, if you go to Amazon, if you go to Google, I mean, these are big headliners that are in the news all the time. You can throw Apple into the mix. You can throw Tesla in the mix. I love those products, and I will continue to trade them week in and week out. What I'm looking for are some hidden gems, names that may not necessarily be in the news all the time, but give us opportunity here in the months ahead. So let's talk about the first one here, and let's go to symbol AI. If we take a look at AI, you're looking at the chart saying, well, how is this an under the radar stock? It really hasn't participated in the big move higher. Here's what I am looking for out of these products. I want names that move back and forth. All right, I know I'm zoomed out. It's hard to see the data here, but I'm zoomed out for a reason. Look at how AI likes to move back and forth. All right, this is not just that one-way rocket ship that we have seen on the upside. If you take a look at NVIDIA, pretty steady move to the upper right corner, right? If we take a look at AI, now you're seeing back and forth. That's what I'm looking for. Again, I'm not looking for a buy and hold approach where I put on a stock position and hold it for 6 months. I'm looking for opportunities in both directions. AI is a great product because it does give us those swings. I couldn't care less if the market moves up or down. I'm just looking for opportunities in either direction. AI meets that criteria. If we take a look at the trade page of AI, the second piece that I am looking for is the liquidity in the options. If I take a look at the October monthly options, if I go out to some of the additional weekly options further out in time, if we take a look at the volume and open interest columns here, we're looking at volume and open interest in the hundreds or even thousands of contracts spread across multiple strikes. When I see that, I know there's opportunity here for multiple types of strategies. If I want to buy calls and puts, I can do so. If I want to sell credit spreads, I can do so. There's plenty of activity here that's going to allow me to get in and out of trades quickly and at good pricing. It's not just the chart that needs to look good. AI does look good, but I want to make sure I can take advantage of the liquidity in the options. AI meets both of those steps for me, and that's why I've had really good success with it. If we go back over to the daily chart, if we go take a look at SanDisk, SNDK. The tricky part about this AI craze is we're at the point now where you can take any company and all they have to do is put AI in a press release and the stock's going to rally. We're in that mania stage. And we saw it in crypto, right? And we're seeing all the different cryptocurrencies. Well, long term, we know they're not all going to make it. At this point in crypto land, we know there's massive opportunity there. It's just a matter of which ones of the cryptocurrencies, which ones are going to make it long term. And we're in that stage in AI where we're going to go through that over the next 6 months, where you're going to start to see, in my opinion, you're going to start to see a corrective phase in some of these products. The NVIDIAs, the Intels, the AMDs, they may continue, right? Because they're bigger stocks, they're more established, you know their product line. With names like SanDisk, with AI, these are products that are lesser known. I believe you're going to see volatility return. I'm not saying they can't move higher. I just think there's going to be an opportunity here where names that aren't directly AI related, here we're in the storage space, right? So it's an indirect AI play, but you can see it's had a massive run. If we go back to earlier this year, and you go back to that spring, the tariff scare, right? we're looking at a $28 stock, and now as of the end of this week, we're looking at a $137 stock. Huge move to the upside. Again, can we maintain this pace? Probably not. But as a trader, I don't care about that. I'm looking for opportunity in both directions. Right? If we take a look at the trade page on SanDisk, you take a look at the monthly options, you'll take a look at the weeklies. Weeklies, not so much a liquid marketplace there. I mean, you've got some activity, but I'm more interested in the weeklies. If you take a look at the Octobers, plenty of liquidity here. More so on the call side, but on the put side, there's plenty of activity there. I haven't had any problem getting filled on multiple types of positions here over the past few weeks. So definitely meets my criteria there. And then the third one is WDC, Western Digital. Again, these are not names that are grabbing the headlines all the time. That's the whole idea of today's video. I'm looking for some under the radar products that are going to give me opportunities as a trader going forward. Again, I'm not looking for a buy and hold investing type approach. I'm not looking at their product line. I'm not taking a look at fundamentals. I'm strictly looking at it from a technical view. I'm looking at what the price action is telling me on the chart and how liquid the options are. If we take a look at WDC, just like SanDisk, from 28 up to 137, I mean, you've got massive opportunity here because if I go over to the trade page, you're also going to be looking at a pretty liquid marketplace. Plenty of activity there, pretty tight markets. I have not had any problem getting filled on this one either here over the past few weeks. So again, I'm looking at these three products in addition to some of those big headliners, right? I'm going to continue to trade NVIDIA, Microsoft, Apple, Google. I'm going to still trade those. There's a big part of my watch list on a regular basis. Now, how do we play this? Let's go from the daily chart and let's go ahead and move it to the 130-minute chart, because this is the chart that I'm actually basing my trading decisions off of. And I want to walk you through a trade example that we just put on here yesterday in SanDisk so you can kind of see how I'm playing this. If I take a look at the 130-minute time frame, this is the one that keeps us pretty active, gives us opportunities in both directions. It's what we find identifies the swings really well without getting caught up in some of the chop that you can see on the shorter time frames. Well, we're coming off of a winning long trade. If you see these green dots, this is our Options Swing Trader Pro program. The nice part about this system is it's reading the technicals for us. We have a very specific set of criteria that we're looking for on every trade. And when that criteria is met, you're going to see an entry point, you're going to see target levels, and you're going to see a stop on the chart. And the system identified price breaking to the upside. Right? We had a trend trade here. We had price releasing again on the upside. It started to pull back here, had a healthy pullback, building energy for the next wave to the upside. And we did get our long trade. And this one just closed out for a nice full profit last week. Long calls did really, really well on the upside. Now, the nice part about SanDisk, again, is if we expect this market to move to the upside at this pace, yes, so you can buy the stock, you can just continue to buy calls. I don't fall into that camp. I believe we're massively overbought. I think there's an opportunity for a pullback here in the near term. Doesn't mean I'm calling a major top. We could continue to head higher out months from now, but I'm looking at what's going to happen over the next 2 to 20 days. And I'm going to change over to a chart that's going to show, just give me a quick second to pull it up, and I'm going to show you how we quantify the overbought condition. Again, same 130-minute chart, but now I'm going to direct your attention down to our pulse indicator down at the bottom. We've got yellow bars popping up on the pulse. What does that tell us? It tells us that price is between a 1 and a 2 standard deviation move on the upside. Doesn't mean we can't move higher from here. It just means it's not statistically probable. Only 13.6% of all occurrences fall outside of this range on the upside. So if I put on a new bullish trade now, I'm fighting the numbers long term. The numbers are telling us, hey, be careful on the upside, initiating new bullish trades, potentially position yourself for either a period of consolidation where we digest the gains or a pullback. Now, if you hear the word pullback, you're saying, okay, let's come in, buy long puts. Here's the problem with that. If I buy a long put option, I need the stock to move to the downside. It's got to do so quickly. It's got to make a decent directional move. Otherwise, the time decay is going to hurt me. Well, I think we would all agree, price is still right up near the high. Right up near that all-time high at 137. We're not seeing price fall out of bed here yet. So I don't want to lean aggressively on the downside, but I do want to have a slightly bearish position on. What else can I do? Let's go over to the trade page and I'll show you a trade that we just took with our members here yesterday. All right, so with the expectation that SanDisk is either going to consolidate these recent gains or start to pull back in the near term over the next 2 to 20 days, what we did is we sold a call credit spread. The nice part about some of these AI stocks, they do have some decent implied volatility being priced into the options. Right? There's some decent premiums there to collect. Well, we went out to the October 17 monthly cycle. Those are the options with 13 days left to expiration. And we went out to the 135, 140 call credit spread. All that means is I'm selling the 135 call and I'm buying the 140 call at the same time. It's a $5 wide spread. It's a fully risk-defined trade. We collected $1.55 on this spread yesterday with our members. I collected $155 per spread. The max risk on the trade is $345. If I'm dead wrong, if the stock continues to plow its way higher, the most I can lose is $345 per spread. Yes, you can take this with multiple spreads. You can certainly adjust position size depending on the amount of capital you are working with in your account. The beauty here is if I buy a long put, I only have one way of making money. With the call credit spread, I have 5 ways. I make money if the stock moves up, down, or sideways, as long as price stays below 135. I also make money from time decay adding up and from volatility decreasing. Any combination of those 5 are going to help me. I don't need all 5 of them working in my favor. In this case, I'm really counting on either a directional move to the downside and some time decay adding up. We know the time decay is going to add up every day regardless of what the stock price does. If we just see it move sideways, that's fine. I'll just continue to benefit from the time decay adding up. If I get any type of a directional move to the downside combined with that time decay, this one can hit target pretty darn quickly, right? This one can move very quickly in this type of market. With AI, all the craze, if some of these names start to roll over, wouldn't be surprised if we have one of those sessions where all of a sudden, SNDK, WDC, AI, if they're down, 5-6% very, very quickly, right? So what's my target level? How do I manage the trade? The $155 that I'm collecting up front, that's my max profit, but I only book that max profit if I hold all the way up to expiration. It's not something I want to do. I want to close it out early so I don't have to worry about the expiration risk as we get closer to expiration. I'm targeting 50% of max profit on this trade. So I'm just going to take my entry price of $1.55, divide it in half, and I'm looking to buy it back at 77 cents. Taking my entry price, divide it in half, that's my target level. Very easy approach. I can get that closing order working right away. I can get that buy order to buy the spread back at 77 cents. I can set it to a GTC or a good till cancel order. That way, over the next 13 days, at any point, if that spread is trading at 77 cents, I'm going to be able to get the trade closed out and book the profit. Now, let's take a look at the downside here. Let's take a look at a trade that does not work out in our favor. I mentioned our max risk is $345. But I'm only going to take that full loss if I hold the expiration. I can always close it out early and take a partial loss. Let's take that 345 and let's take 70% of it. I want to use a 70% stop on the credit spreads. I'm just going to take that 345, take 70% of it, which is $241. I want to get out when the spread is down 241, but that's not my stop price. I have to take that 241 and I have to add in my $1.55 credit that I'm collecting to open up the position. And that would leave my stop price at $3.96. If I get out at that level, it's going to leave me with a $241 loss or 70% of the max risk. So again, it's a fully risk-defined trade. A lot of times people get caught up just buying calls and puts because that's what they feel is safest or that's what they're comfortable with. Here, I'm drastically cutting the risk on the trade compared to a long option, and I'm giving myself 5 ways of making money on the trade. That's why I love these types of strategies. That's why I love the AI stocks. There's so much opportunity here. Bullish market, bearish market. If I just want to lean in with a more conservative approach, I can use a credit spread. If we see price fall out of bed, if we see price rally higher from here, I can always go to the long calls and long puts. I'm not backed into a corner forced to wait for one type of market condition. I can take what the market is giving us. Now, some of you might be looking at this saying, Mike, I don't understand how to use a credit spread. I sure would like to have the indicators on the charts telling me where to get in and where to get out. Well, we are going to be holding a webinar upcoming here on October 21st. Free webinar where I'm going to be able to dive into a lot of trade examples and walk you through how we're doing it and actually give you the ability to join our team and to access the indicators for yourself. It's really going to be a great opportunity for you to take your trading to the next level. So I'm going to put a link in the description of the video. Go ahead and click on that link, get your spot reserved. Again, free webinar coming up on October 21st. We'd love to have you join us. If you have any questions on the SanDisk trade or the 3 markets that I talked about here today, you can also comment on the video, or you can send us an email, info@netpicks.com, and we'd be more than willing to help out. All right, I'm going to wrap this video up here. I'll be back with you guys over the next few days for our next video.
Everything discussed here is our opinion, and it is not to be taken as investment advice because we are not your financial advisor, nor have we considered your personal situation as your fiduciary. This presentation is for your education and entertainment only. Please review NetPicks' full risk disclaimer and privacy policy.